Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Invest Conference. And I'm here with Pat Finn, Ed Lopez from Market Vectors, the renowned suite from the Van Eck Global Group. Now, folks, ETFs are obviously a big part of your business, but not many advisors know that over at Market Vectors, you've got a unique relationship with Morningstar where you've created your own smart beta ETF. Tell us a little bit about it, Ed.
Yeah, absolutely. I think you're referring to the Market Vectors Wide Moat ETF.
Right.
It's a very cool product that we were really excited to launch in April of 2012. And it's deceptively simple, but it's great because it marries quality and value, but then really brings the Morningstar equity research to really drive it home. And it's been a great little product in terms of performance and just a great simple story that advisors can tell.
So this index was created a while ago by Morningstar, right?
Right, I believe it's been around since 2007.
Okay. And then you guys partnered and you said, hey, listen, you got a great index here. Let's put it to work, make it available to investors. Partnered, made it a ETF within the Market Vectors group, right?
Absolutely. It used to be an ETN before, not from Market Vectors. There was an ETN based on the index.
Yeah.
But we found that we could bring it out in an ETF, which is a preferable vehicle.
Yeah.
And that provided great benefits for the investor as well. It's a higher turnover strategy, provides great consistent returns, and the tax advantages of the ETF structure has made it really attractive.
So bringing investing like Warren Buffett to the average investor, right?
Absolutely, yeah.
Yeah, so it's MOAT is a ticker.
MOAT.
So innovation, I know, is a big part of what you do. You know, Pat, you guys are big in the emerging market area as well.
Sure.
What's new and exciting in that area for you guys?
Well, emerging markets from the client's perspective that we speak to has been kind of misconceived in many ways. They don't realize that there's quite a healthy economy happening, and in many cases, it's our job to sit down and explain, especially from a debt perspective, why emerging markets make sense. So we had the first EM debt product, for instance, on the local currency side, EMLC. That started, 3 years ago, Ed?
Yeah.
Over 3 years ago. And we've seen clients just clamoring for the next iteration. So the sovereign space has been a fantastic place to be, but now as the emerging markets grow from a debt perspective, they're coming to us to say, what do you have in the corporate arena? What do you have in the high yield arena? And that's where we've seen the next level of conversations around emerging markets.
You guys early on identified that emerging markets balance sheets were in much better shape than a lot of the developed markets. And not only that, from a yield standpoint, you're getting paid for that. So much more, right?
That has been a consistent story that we've been speaking to our advisors about, is highlighting the fact that if you look at just a simple debt to GDP ratio, in most cases, every single emerging market has an improved ratio compared to their G7 and developed counterparts. Not to mention that you're getting a yield advantage that you, like you highlighted as well.
Right. So about speaking to advisors, that's something that you folks do at Van Eck and have done for many, many years. You go to them, you find out about their businesses, and they give you ideas for products that you develop. Would you say that's true?
I think the ideas come from everywhere, from clients, from some of our own portfolio managers, from some of our own ideas as well. So we're open to finding ideas wherever they come from. I think the main thing is markets are always evolving. And so there's new opportunities that become available, and we use the ETF structure as a way to tap new areas and provide interesting investment opportunities. And as the markets evolve, there's ways to improve upon what's already out there as well. So that's kind of really been driving our strategy.
So Van Eck's been around for decades, but ETFs haven't. What does the ETF business mean to you folks?
It's a very important part of the business. We started in, Van Eck's been around since '55, the ETF business since 2006 with the launch of GDX. It's been a tremendous vehicle for getting Van Eck out there in the marketplace, and for us to be able to bring to market ideas that we had that we want to see as investable products.
Yeah. So mention GDX and GDXJ. Again, miners have been challenged for sure, but you've got two of the biggest miner-related ETFs. I mean, you talk to people on the street, valuations are in great shape in that area, and eventually they're going to come back. People don't like to talk about things after they've declined a bit, but for those folks that are looking for value, you're getting a lot of advisors' attention.
Yeah, absolutely. I think there's some advisors that have taken the dips, or maybe it's more than just a dip in gold, but that opportunity to come back in and try to buy gold now. I think you're right. The gold miners have done a lot to shore up their balance sheets, to improve it and make themselves look a little better. Yeah, there might be an opportunity in gold going forward.
So there's something out there for everybody in the ETF world, and it just keeps getting a little bit better. It sounds like, you know, not only the success you've had with developing relationships with Morningstar, but more importantly, by listening to advisors, that's something that's really helped you out. Would you say that, Pat?
I think the key for us is all about the advisor, is that user's feedback and the experience that they have investing in our products. We want to be the ultimate. And I think that really is a testament to our innovation. Them partnering with us in some cases is their validation of our innovation. And so I think that really says a lot to not only what the index providers and some of the folks here at the conference overall feel, but really getting back to our client, keying in on why they're choosing market vectors given the many options they have out there.
Great. Guys, thanks for spending some time with us today, and continued success.
Thank you very much.
Thanks, Tom.